Here again with Smart System. In our last lesson, we looked at some of the psychological difficulties that people have letting their profits run, and introduced the concept of a trailing stop as one potential method of dealing with this. In today's lesson, we're going to continue our discussion on trailing stops with a look at several of the different ways which traders implement these in their strategies. So let's get started. As we spoke about briefly in last lesson, once a position has begun to move in a trader's favor, many successful traders will manage that position through the use of what is known as a trailing stop. The simplest type of trailing stop is what is known as a fixed trailing stop. And in very simple terms, what this means is a stop that moves along behind a position as that position begins to move in the trader's favor, but stays fixed if the position moves against that trader. So basically, what you're looking to do here with a trailing stop is to lock in a large portion of the profits the trader has made up to the point where the market reverses and the stop stays in the same position, and then eventually stops the trader out of the position before the market moves too far into his profits. So as an example here, let's say you've been looking at the chart on the screen here, this trend in euro-dollar that started back in August, and we're looking for an opportunity to get into a trade, and based on your analysis, you decided that if the market broke out above this little resistance point here that I've highlighted, that you're gonna enter long at 1.436, which is right above that point, and try and ride that trend. So to manage the trade you're going to place a 100-point trailing stop on this position, which would be at 1.426 since we entered at 1.436. If the market moved down to 1.426 from that 1.436 level, then nothing would happen to that stop, and your stop would be elected at the 1.426 level when you be taken out of the market with 100-point loss, not including any slippage commission that may have occurred there. As you can see from this chart, however, the market continued to rally up from the 1.436 point. So basically what's going to happen here is every time the market moves up, that stop is going to at 1.426 is also going to move up, so that it's always behind current market price. As long as the current market price is moving in your favor by 100 points. So market moves at 1.44, then that stop is going to be at 1.43. But if the market after the market moves up to 1.44, if it pulled back to say 1.43, your stop is still going to be at 1.43, because this trailing stop does not move once. The market, it only moves when the market moves, and your favorite does not move when the market moves against you. That's sort of the purpose of it. So with this in mind, once the market topped out here at 1.4752, it did pull back 100 points. So that stop, which would have been at 1.4652, when the market hit that high of 1.4752, would not have moved backwards, as the market pulled back down, and we would have, in this example, been stopped out of this trade at 1.4652. So this is in general how trailing stops working. Most broker platforms will allow you to do this procedure automatically to enter a trailing stop in, so you don't have to do this manually. However, there are some different nuances depending on the market that you're trading and who you're trading with. The trailing stop may work a little differently from broker to broker, from market to market. So make sure you understand the details of the specific market and the specific broker that you're trading with before you try one of these waters out, if you do decide to integrate that in. Now, in addition to the fixed trailing stuff, which we've looked at here, there are a couple more that you know. We've looked at the indicators in previous lessons, so I'm not going to go over the charts here. Another way of doing a trailing stop would be based off of indicators. The parabolics are, as I mentioned in last lesson, is a great example of an indicator that was designed by Wells Wilder exactly for this purpose, to move a stop up as the market moves in your favor. All of the other indicators that we've studied can be used as a sort of trailing stop, as we sort of touched on in last lesson. And a great example of this, just like you can use the average true range or ATR, as we looked at in the lesson on that. To set a fixed stop, you can also use the ATR, or any volatility-based indicator, to place a trailing stop, and sort of keep that trailing stop outside of the market noise. So you know, you could initially set your fixed stop at 2 ATR below the current market price, and then maybe trail it up 3 ATR below, or something along those lines, to keep you safe and outside of the market noise. Depending on the strategy there, you can go back over that ATR lesson. You should be able to see how you could incorporate that as a trailing stop. Same thing with moving averages. If you plot a moving average on a chart, especially when trading a trend, a lot of traders will use the moving average as their trailing stop, maybe in conjunction with a fixed stop there, which is a good idea too. Make sure you always have the fixed stop as well in that case. Lastly here, some traders will have their profit target and they'll have their hard stop in. Once the market hits their profit target, at that point they will decide to put a trailing stop on to give back just a percentage of their gain that they've had up to their profit target, instead of just taking the trade out at the profit target altogether. But this is just sort of a general overview of the trailing stop there and the fixed stop in the indicator. Base stops is probably the best examples that most traders use there. So that's our lesson for today. And next lesson, we're gonna look at another aspect of money management, which is position sizing. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section. And good luck with your trading. Have a great day.